and welcome to Prime Property, your weekly real estate reckoner. I'm Nayantara Rai and this is what we have on the show today. With the fate of 30,000 home buyers in limbo, builders petitioned the Prime Minister's office to expedite the decision on the eco-sensitive zone around the Okhla Bird Sanctuary in the national capital. An investment that is double of India's current GDP is needed to meet Narendra Modi's vision of housing for all by 2022. That's the essence of a report by KPMG and the National Real Estate Development Council. Tax ambiguity over real estate investment trusts or REITs persists ahead of their launch on the 1st of October. And commonflow.com answers viewer queries on Property Doctor. Almost 30,000 home buyers left in a lurch. There are doubts over the future of another 70,000 flats under construction in Noida in the national capital region. Residential projects of as many as 53 builders hangs in the balance. And after the country's largest mall under construction, the DLF Mall of India in Noida received a stop work notice, builders have sought for the Prime Minister's intervention. This is the DLF Mall of India, marketed as India's biggest mall spread across 1.8 million square feet, with a 7-screen DT multiplex and a parking lot for 3,000 cars. The Mall of India was supposed to open for business last year, but that already delayed launch is now stuck in green tape. DLF, like many other builders in Noida, has been directed to halt all construction till it gets a green signal from the National Board for Wildlife.
And obviously, because it's a matter which is being dealt with between those regulators of both the pollution board as well as possibly the wildlife and all of those things, I wouldn't sort of hazard a specific comment, but clearly, our legal teams and our operating teams are working with the regulators to find a solution on that piece. I mean, the mall, as you know, physically is almost up.
The stop work notice to DLF comes within 2 months of the Supreme Court dismissing another builder, JP Infratech's appeal against an order of the National Green Tribunal red flagging construction in the eco-sensitive zone surrounding the Okhla Bird Sanctuary in New Delhi. That same NGT order had also banned the grant of completion certificates, which are vital for home buyers to begin moving into their properties. JP Infratech's counsel Abhishek Manu Singhvi had informed the Supreme Court in June nearly 4,000 flats constructed by the company are completed and home buyers who have paid for them are awaiting occupation certificates, in the absence of which buyers would suffer financially. Builders say they had all the requisite approvals and could have never foreseen a retrospective order from the NGT.
See, all these projects have all legitimate approvals. These projects have been approved by Noida Authority. Subsequently, they have been cleared by SEIAA, which is State Environmental Impact Assessment Authority, which is the paramount authority in the state to provide approvals in the cases related to MOEF. Every project which is on that list has already obtained consent of MOEF, then only constructions have started. So to pass on an order which has a retrospective effect, especially on the projects where all the investments have taken place and they are nearing completion, definitely creates a lot of mental and financial hardships for all stakeholders in those particular projects. This particular judgment of NGT or order came in August of 2013. Prior to that, there was no such a restriction on Noida Authority, and approvals were already given by state MOEF committees and authority. So there's nothing wrong with the projects. They have all the approvals in place.
Here's how it all started. The bone of contention was the identification of an eco-sensitive zone surrounding the Okhla Bird Sanctuary. The National Green Tribunal had directed the Environment Ministry to identify such an area while directing that all construction in a 10-kilometer radius be halted. The NGT had restrained the Noida Authority from granting completion certificates to any of the projects in the zone. The NGT had also deemed all environmental clearances as inoperational until a no-objection certificate is secured from the National Board for Wildlife. The Uttar Pradesh government has said a 100-meter radius should be considered instead. CREDAI has now petitioned the Prime Minister's office to expeditiously resolve the crisis. In a letter dated 18th August, CREDAI says the plight of 1.5 lakh people hangs in the balance. CREDAI is assuming 5 people per apartment for the 30,000 flats that have been hit by the NGT order. CREDAI went on to write, approximately 25 lakh square feet of retail and commercial institutional development is ready to move in with an investment of approximately 20,000 crore rupees by small entrepreneurs and reputed national as well as international organizations, and it's stuck indefinitely, which is affecting the possibility of creating almost 20,000 new jobs. Noida and Greater Noida's reputation as a safe and an affordable property market has suffered many setbacks in recent times. Last year, hundreds of farmers had violently protested and had ploughed down housing sites of as many as 60 builders with their tractors in Greater Noida. Then earlier this year, the Allahabad High Court had ordered the demolition of 2 towers, 40-story high each, of well-known builder Supertech. India's housing sector over the next 8 years requires an investment which is twice India's current GDP to meet Narendra Modi's vision of housing for all by 2022. That's the essence of a report released this week by KPMG and the National Real Estate Development Council. The report envisages a whopping $2 trillion investment in real estate and another $2 trillion in urban infrastructure like roads, sewage, water, etc., as well as investments in office and retail developments. To meet its goal of housing for all by 2022, the government has also announced it will set up 100 smart cities, for which an allocation of 7,060 crore rupees was made in Finance Minister Arun Jaitley's maiden budget. Smart cities have been conceptualized as new eco-friendly urban clusters in suburbs of bigger cities. The government plans to deliver 3 of these smart cities by 2019. All 3 will be part of a larger $90 billion project called the Delhi-Mumbai Industrial Corridor, or the DMIC, that had been initiated by the UPA. The Indian government is working closely with Singapore to develop clusters of what it calls Little Singapore along the DMIC. That's how Sushma Swaraj described Singapore's offer for cooperation while on an official visit to the country. On 16th August, Sushma Swaraj said, Singapore's expertise in small cities, urban planning and water management strategies offers a valuable learning experience for India. We shall work for setting up greenfield smart cities and for urban rejuvenation. Our experts shall identify the priorities and we shall coordinate its timely delivery." Unquote. On 10th August, market regulator SEBI gave its final approval to Real Estate Investment Trust, or REITs, as well as Infrastructure Investment Trust, thus opening up another avenue for the fund-starved infrastructure and real estate sectors. While this is good news, there continues to be ambiguity as far as various taxes go that could make this an inefficient structure. Manasi Gilani decodes the fine print.
$20 billion. That's the amount expected to flow into the real estate industry soon. Capital market regulator SEBI gave final touches to the guidelines for real estate investment trusts and infrastructure investment trusts that will meet the sector's fund crunch. As per the final framework, the minimum asset value of REITs is reduced to 500 crore rupees from 1,000 crore rupees. Investment in assets will either be direct or through special purpose vehicles in which they should not hold less than 50%. The SPV must hold at least 80% of its assets directly in properties and will not be allowed to invest in other SPVs. REITs allows maximum of 3 sponsors with minimum holding of 5%, ensuring higher accountability of the sponsors. 90% of the net distributable cash flows has to be distributed to investors on at least half-yearly basis. An investment limit for investors in REITs remains unchanged at a minimum 2 lakh rupees. But what continues to remain a bit of a tizzy among industry players is the play of taxes, starting with the dividend distribution tax, as the SPVs distributing dividend to business trusts will be subject to it.
Clarification which was essential was on DDT once again in comparable funds, since at the time when the final transmission, at the time when the income is distributed to the investors, to the retail investors, it's not applicable. I would assume that clarity we will find soon when the fine print is available with us.
Capital gains tax is another tax that's clouding the process. Currently, the tax is levied on the entire value when the sponsor ultimately sells the units on the stock exchange.
The cost of the shares is 10 rupees and you transfer to the REIT or you swap with the REIT at 100 rupees, and if the ultimate sale is at 500, what will get taxed is 500 minus 10, which was the original cost. So the clarity being sought is the tax should ideally be on 100 minus 10, and 500 minus 100, which is 400, should be exempt because that is something which is akin to selling the unit on the stock exchange.
These central taxes, combined with stamp duty and registration charges on the property purchases, makes this a highly tax inefficient model for valuation. But with 376 million square feet of office space, which is grade A, waiting to hit the markets, analysts expect that the government and the regulator will revisit the guidelines and provide some tax flexibility. And this process is expected to kickstart in the next 2 months. In Mumbai, Manasri Gilani.
On that note, we slip into a short break. On the other side, it's time for Property Doctor, this week with commonflow.com.